The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Thursday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. 24 minutes to go until the start of trading, and we have markets catching a bid. We have a CPI number, the lowest number since 2021. We'll jump over to that. Consumer prices rising at 2.7% on an annual rate, lower than expected. You got some delayed data in there. We have November data. You got a lot of Black Friday sales in there as well, but nonetheless, the markets are taking it and running with it. S&P's up by 0.8%, up 56 points to 68.34. NASDAQ 100, we're up by 1.4%. You got Micron trading higher on their earnings last night as well. NASDAQ up by 1.4%, up 353 points, 25,253. The Dow up by 0.5%, up 243 points, 48,483. And the Russell up by 1.2. Check out that move on the Russell on that CPI data. We jump over to yields. An initial reaction higher, but just like that, we're right back to where we were. We got the 10-year right now. We are positive. We're higher 7 ticks. We got a 10-year yield of about 4.13. Okay, 4.13. Now, you got an initial spike higher, and then you gave it back. You jump over to the dollar, and yeah, we got dollar weakness no matter what. Dollar at 98.27 right now. We were trading at 98.55, and I say no matter what, as in we don't have a reaction in yields, right? The yields are right where you were. Now, that was your 10-year. You jump over the 2-year, we're a little bit higher on that inflation data, but we really gave it up. You see the initial spike, thinking the market saying, oh, we got a weak CPI number. Inflation's not a problem. That's going to allow the Federal Reserve to cut because they're worried about jobs, and if they don't have to be worried about inflation, then that's the green light they need. But then the market gave it back just that quick. But you know where it didn't give it back? Was that dollar. We're now below the lows of yesterday at 98.27 right now. And on Tuesday, we hit 97.86. We'll see how the day progresses. You jump over to metals. Gold catches a bid on a weak dollar. We were just at 43.50 coming into that number. Gold, negative $3 on the session. But we are, what, how close? Yeah, about $25, $27 away from all-time highs. Gold trading at 43.71. Coming up to the highs of October, 43.98. That's your daily on gold. You jump over to silver. Silver hit $67 for the first time ever yesterday. And we're pushing those levels yet again today. 66.54. Silver, negative by 36 pennies on the session. You're jumping over to all the metals, right? Platinum, party like it's 1995. Now, platinum, what's interesting is, so 1995 was what we hit last night. We've given it up a bit. We're at 1952 right now. We are now above the highs of 2011, but you do have this spike high from 2008. Looks like that's what platinum might be going for, 2308. But platinum, right near 2000 this morning at 1953. You jump over to copper. Copper's flat this morning. We check in on natural gas, which has been struggling. Finally catches a bid yesterday. We're higher again today by about 11 pennies. Natural gas trading at 4.13 after trading all the way to 3.84 yesterday. You jump over to Micron briefly on their numbers. Yeah. How about trading from 225 to 260? How's that for an acceleration to the upside? You check out. So Micron's going to open at 260, 259. We got an all-time high at 264. Just like that, you're going to challenge the highs on Micron. Then one of the darlings of this year, up almost 200%. You kick the year off at about $90, and we're pushing 260 right now. All right, let's check out the inflation data. So CPI for the month of November. We pull up the headline number. Core rising 2.6%. Headline 2.7%. The headline number they were looking for. Oh, that's unemployment. We'll get there. There we go. Consumer prices rose 2.7% in November, down from 3% in September. There's no October comparison. Now, the Fed's probably going to wait until We get the December number to compare it to the November number, okay? The headline number, they were looking for 3%. Headline number, they were looking for 3.1%. Comes in 2.7. Okay? Core comes in at 2.6. They were looking for 3%. Now, as you go down the Bloomberg Live feed, which is always a great feed as you're breaking on this news, just kind of analysis as you're breaking throughout. Now, there may be a quality issue with these numbers. That was Powell, okay, even talking about that, right? We're going to get some much more clarity once you get into December. Supercore, yeah, lowest reading since inflation started exploding back in spring of 2021. Okay, that strips out food, energy, and housing, up 2.7% year over year. And yeah, there's always adjustments, okay? The CPI will likely raise questions over certain adjustments that statisticians had to make given the lack of October data, okay? More unreliable than usual, but ignored at your own risk. Now, you break down the different components. Year over year, this is. Food, 2.6. Food at home, 1.9. Meat, poultry, fish, and eggs. It's like the most important part of our diet, right? 4.7%. Non-alcoholic beverages, that might be the most important part of our diet. 4.3%. You can drink water, though. It's free. Not always, but cereals, bakery products, 2%. Fruits and veggies, almost flat. Go eat some fruits and veggies. No inflation on fruits and veggies, folks. One of the most healthy parts of your diet. Some fruits, some veggies, meats and poultry's in there, helps balance it out. Dairy and related products, down 1.6. You want to save some cash? Go big on dairy. I kid. Now, the other thing you are going to see, and I was out here harping on it, there was some amazing sales in November, right? Was everybody buying a phone, a tablet, and a watch like I was talking about? So you're going to see some of these prices. There were some great deals, man. You know, consumerism alive and well, and it's almost turned into an entire Black Friday month in November. But nonetheless, when you're talking about the Fed, you better believe they should be worried about jobs. If we got inflation pushing down to 2.7% and you have weakening jobs on that front, yeah, you better believe it. All right, unemployment claims decreasing, 224,000. The week ended December 13th. The median forecast was looking for 225, so you pretty much come right in line. Things get a little swingy around this time of year. Four-week moving average, 217,000. Continuing claims, rising. That's the one you want to watch. Continuing claims rising, 1.9 million. All right. Come on back, folks. We're going to check out some equities. We got Tesla shares. Talk about a give back, man. You ring that bell, and then just like that, you trade down, $30 from the open yesterday on Tesla. Tesla going to open $10 in the green this morning. Markets in the green. We got a weak CPI data. We'll come right back, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got the S&Ps up by about 0.9%. NASDAQ 100 leading the way up by 1.5%. We jump over to NVIDIA shares, up about $4 in the pre-market. As I mentioned, Micron, how about it? Pushing almost 260 right now. All-time highs for Micron, 264 just recently. And yeah, we are higher. And what is it? Memory demand. You better believe it, man. First quarter estimates, blowout guidance. AI memory outstrips supply. The company said it expects total addressable market for high bandwidth memory to be $100 billion in 2028, growing at a 40% compounded annual growth. That's the market. That's not their business, but that's the market that they are in. So CapEx guidance, more than a 10% boost to $20 billion from $18 billion. More than sold out, significant amount of unmet demand. They got a supply problem, and that's a good problem to have, at least in the short term. Excuse me. So they make $4.78 a share on $13.64 billion. The market was looking for $3.95 a share on $12.84 billion. Talk about some numbers. Current quarter, $18.7 billion. And the market was looking for a 14.2. Earnings going to reach 842 versus 478. I mean, that's what you got to do right now to blow away earnings. You talk about blowing it away. We believe the next 12 months are going to have broader coattails to the AI trade than just the processor names, and memory would be the biggest beneficiary. Talk about some numbers, man. You know, we got some selling in this equity with some volume. But boy, you know what? It's probably going to blow it all away today. You're going to gap higher. You're going to do a volume, and we're going to challenge the highs. Micron pushing 257 right now. Amazon shares were about $4 higher with the market. I've had some selling on Amazon recently as well. You trade higher on their earnings numbers. You catch a bid at this 215 level. That's your daily. Let's take a look at the weekly on Amazon. Looking for a sign of strength. And, that would be it on their earnings. But you make a high on lighter volume. You give it up. We're right back into this area. This is the last sign of strength going back to June on a weekly basis. That's your sign of strength there. But the fact you trade higher gave it up. Amazon pushing 225 this morning. All right, we check back in on yields as we got a weaker dollar right now. Digesting that CPI print, and I got to update that one. All right, here we go. A little bit higher from where we came in, but not really. Yeah, right where we were at 8:30. That's a 15-minute bar. You check out the 5-minute bar. A little bit of higher price, lower yield, but very muted reaction to some pretty rosy numbers when you talk about inflation coming in at 2.6 to 2.7%. The market was looking for 3% to 3.1. It's a huge beat. A little bit worried, I think, about the fact that that's coming in November. The biggest sales out there are going to be in November. Dollar catches a bounce on that lower level, 98.32. All right, we'll check back in on Warner Brothers Discovery. We'll see if they can get those two suitors going at it again. They're looking for Larry Ellison's personal guarantee in that bid. It's not happening just yet. Warner Brothers trading at $28.40 right now. Remember, that Netflix price is about $27.75. So that's like your floor, right? What's your risk if you're buying Warner Brothers Discovery? Probably $27.75 right now. What's your reward? Well, your potential reward is that somehow they got to pay more money, but that doesn't seem to be the case just yet. You jump over to Paramount Skydance, you're trading at $13.15 right now. Netflix shares trading at $95.19. And yeah. And we talked about it a little bit yesterday, saying that the guarantees of this were opaque. They had loopholes. And it's not a coincidence if that's the case. If you want to buy our company, sign on the dotted line yourself. Don't just put behind it a bid that we can't rely on. Yeah, their bid is higher, but it's not that simple. Netflix is only buying the studio, HBO Max, and HBO Max. Warner shareholders would continue to own and spin off networks such as CNN, TNT, which is somewhere in the neighborhood of about $2 to $4 a share in itself. Yeah, this is going to take some time. The revocable trust, right? Ellison's family's pledged $11.8 billion, alongside $24 billion from 3 Middle East sovereign wealth funds. Kushner had pulled out. The Ellison family has vowed to backstop the whole $40.7 billion equity commitment. The filings show both Ellisons were deeply involved. Ellison's equity is supported by an unknown and opaque revocable trust. It's simply an agreement holding asset of the person who set it up for the benefit of whomever they designate, typically themselves, while they're alive. Usually when the creator dies, the trust becomes irrevocable and holds the assets for the listed beneficiaries. That's what's in there. And they just want him to put the line in there himself. would guess it's not quite that simple, right? That's what the Ellisons are saying, but if it was that simple, they'd take the money. If it was that simple, wouldn't you take the money? Of course you would. Paramount's saying that trust contains over $250 billion in assets, including roughly $1.16 billion in Oracle shares. Only someone with access to the documents could determine whether the trust and asset pledge offered a firm enough equity in the deal, though. And yeah, this is going to go on for some time. And as I mentioned at the beginning of it, right? Think about it. No matter what, if Netflix gets this deal done or if they don't, HBO Max is like frozen for 12 to 24 months. They can't do any big deals. They can't make any radical change. Even if Warner Brothers just holds them up, they're stuck for a year and a half without being able to capitalize on that. Maybe Netflix gets them then. All right, we're coming back for the opening bell. Markets, S&P's up by 60. Come right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open, opening bell, and we are at pre-market session highs. We got a CPI data print for the month of November. We did not get October, so we missed October. We might have a little bit of volatility in terms of those numbers, the quality of that data for November, but you're seeing the market reaction today. Now, what's surprising is you haven't seen a reaction in yields. Everything else is reacting. Okay, we're a little bit higher in price and lower in yield, but that's a 5-minute chart, and it 8:25 this morning, we were at 112.23 on the 10-year, and we're at 112.24. So that's one tick of movement. You jump over to the 2-year ZT. Okay. Same thing, about one tick. But yes, you got higher price. You have lower yield since that 830 number, but about as muted as you could get of a reaction. And then you look at the dollar. And the dollar came into that number at about 98.40, and we're at 98.32. So not even that dramatic, I guess. But you do get acceleration from where we were at 7 this morning, from 98.53 down to a low of 98.17. We'll see if yesterday's action can hold. That was quite the acceleration to the upside. Tuesday hit 97.86. Pressure seems to be on the downside right now on the dollar. And the market's loving the prospect that inflation is not going to be on the forefront of the Federal Reserve. We look at the prospects for future meetings right now. Now, we're currently at 3.5 to 3.75, okay? Right now, the market's thinking about a 74% chance that we get no cut, and this is on the January 28th meeting. You go out to March, it's almost a 50-50 whether we would get one cut over the next two. What I did want to highlight, though, is that these odds are going up a little bit, okay? A week ago, the odds that we were going to be right where we are right now at about 52%. Now they're only at 42%. The odds we get one more cut over the next two meetings, 47%. We were at 40%. The odds that we get two cuts at almost 12% from 7%. We talked about it on the program, right? A week ago, when you're coming into the Fed, okay, we're just on the heels of the Fed technically. A week ago was Wednesday. Two cuts all next year is what they're pricing in as of that Fed meeting. This chairman has 3 meetings left. Okay, those 3 meetings, the Chairman Powell has January 28th, March 18th, April 29th, and then the next chairman, whoever it is, maybe one of the Kevins, is going to get 5 meetings up until December 9th, and their first meeting being June 17th. So the market pricing in some more cuts right now. The dollar is facing a little bit of weakness, and gold is pushing highs. Gold negative $1 on the session. Silver right now negative by 60 pennies, but basically chopping around right near those highs. Check in on some of the Magnificent Seven. We got Amazon catching a lift, up by 1.8% for Amazon. You jump over to Microsoft, up by 0.8% right now. NVIDIA catches a bit, up by 1.7. I was saying yesterday, we were almost going to get a 3 trillion handle, right? And NVIDIA now at 4.2 trillion. And remember, you got about 25 billion shares for this equity. You're down, what, 27, 37, 40, 40? Oh my goodness, yeah, it's about $1 trillion. You're down $40. You got almost 25 billion shares outstanding. $1 trillion lost in the last 6 weeks on this equity. We didn't have $1 trillion equity until what, 2019 or 2020? So Micron, yeah, this next quarter coming up, they're pushing the all-time highs, and you're going to have some volume today on numbers like this. I mean, look at this on the daily. Micron's already done 13 million shares. A couple of days ago, we did 22 million. It's 9:34 a.m. So, man, if you can blow away these highs, and you're going to have the volume, and that high is 264.75 for Micron. Okay, Broadcom's up by 1.4, but you give it back on the open. Look at that. Ooh, Dell shares down 2.5% right now. You jump over to Oracle, up by 3% almost on Oracle shares. Google shares up by 1.5% right now. CCJ up by 4%. Uranium and the president's personal companies are getting involved in nuclear fusion. So Trump Media announces a $6 billion merger with a fusion company, TAE Technologies. DJT stock is up. All stock deal Not surprising that there's not a cash transaction here, right? You create the shares, you use the shares. Expected to close the middle of this year. Shareholders of each firm owning approximately half of the combined company. So the president's media company is going to be in the fusion business. And I understand the president's a businessman, but in the merits of capitalism, it's very important that you have the market decide who the winners are. And this one in particular, I find remarkable that somehow the country's best served by the president and his family getting into the fusion business, and that somehow that's not going to have any type of bias with potentially where government funding goes, with what happens, as opposed to allowing the best company in the market to flourish, which is how the most jobs get created and the economy grows the fastest and how the best companies succeed. Nonetheless, the president's now in the fusion business, or his son is, right? That would be how you state that, because it's DJT. And there's your DJT up by 24% today. I know it reeks of sarcasm, but at some point, to argue that the fusion business is a necessary component of the Trump family business. But in reality, this chart basically says it all. It's a SPAC that came all the way back to $10. The president gets elected. You push all the way up to $55, and be careful in this equity, folks, to put it lightly. There's no point in even analyzing the volume in this right now. And yeah, that's not to say that the president's company merging with a fusion company and getting in that business right now will not somehow end up benefiting the president or his shareholders. But that's not how market forces usually are conducted. Jump over to crude. Speaking of energy. So we had quite the bid yesterday, and we do it with volume. Look at that daily. We engulf the entire prior day, and you do it with some volume. It's one of the first encouraging signs for crude in a while. You're zooming in. Whoop. Let's try that again. Yeah, 318,000 contracts. That's the biggest day going back to November 21st, and you engulf the entire prior day. I mean, this is where it's nice if you're trading crude, right? You're at 56.14. Okay, you have a nice sign of strength yesterday. If you're in this trade, where are you getting out? Well, definitely getting out if you trade below yesterday's low. Because if that's your sign of strength, you don't need to break below that. Crude, up by 30 pennies. We'll come right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We get the S&P futures right now up by 49 points. We give it back slightly on the open. We got a CPI print, comes in between 2.6 and 2.7%. The market was looking for a CPI number near 3%. If we're worried a little bit less about inflation, maybe the Fed can cut a little bit more, especially if they're still worried about the jobs front. And so what do we have? We got markets in positive territory this morning. You jump over to yields, a little bit of higher price, lower yield right now. We jump over to your 10-year. We're positive by 10 ticks right now. The 10-year, forgive me, I just had that yield up there. 4.11. Okay, 4.11 the yield on the 10-year. The dollar at 98.34, and metals, we got a little bit of a downturn in metals there. Gold pulls back, down by $25. We got some selling going on in gold right now. Jump over to silver. Okay, they're selling the metals. You know, if you've had a run in this market, folks, all I encourage you to do is set a stop. Okay, it's been almost a 2-year run to higher prices. You check out silver. You back it up to February from 22 to 64. The run really began February, March last year, right? You had a nice little consolidation. Gold was trading at about 2,000. You're up to 4,300 right now. We take a look at a 5-year weekly. Look at this consolidation, right? And then you break out. February of last year. We'll back it up even further on a monthly. And what's remarkable is, where's that consolidation? Right above the consolidation from 2011. You had highs of 2011 of 1923, okay? And that's where we were coming into 2024. So 13 years, right, from those highs. And then you get that acceleration. All I can set a stop, folks, okay, because there's going to be plenty of trading opportunities. You take a look at the XAU, the HUI. Okay, it's been a remarkable run, folks. XAU just traded from 120 to 330. That's from last year. This year alone, you're up from 138 to 337. We're going to get some more volatility. Yields are very volatile, okay? We have a Fed with a new chair coming. We're going to get that new Fed chair in like 2 weeks. That's volatility. We got a new Fed chair. Their first meeting, though, we're going to get that new Fed chair, and their first meeting is not until June. And as we go into the new year. So I encourage you, set a stop. You know, it's been, no matter what equity you pick in this market, man, no matter almost where you got in. Did you get in at the beginning of last year? Did you get in at the beginning of this year? Did you get in July? Okay, just protect yourself. There's going to be more opportunities. There's always another trade. You know, my dad used to say, you trade the equities, you hold the metals. Okay, and if you're in any of these equities, I encourage you to go take a look at the historical charts of some of these equities and how well you were doing, and then how well you pull back. Because AEM, yeah, you're well above areas. And I'm just, Yeah, it doesn't even matter which one I pick. Look at New Gold. All right, New Gold was at 39 pennies. You're at 8.29, but guess what? You were almost at $14 at the highs. Okay, many of these equities, right? Hecla, look at the rise and fall. My goodness, what a run these metals are on. First Majestic, you can't help but chuckle. Okay, you feel like a champion on top of the mountain right now. And listen, gold might have higher to go. Silver might have higher to go. I think the dollar's under pressure. Okay, I think the dollar's under pressure going lower. But you still got to protect yourself, because look at the historical charts of these miners, folks. Okay, check out just the XAU and the HUI. We just broke above those levels for the first time in the middle of this year. XAU, 2011 at 231, back to 38, right? HUI, my goodness, this one took even longer, from 638 down to 100. So protect yourself. Okay, we're going to get some volatility. It has been an extraordinary trip to higher prices. Check out Barrick, okay? From $55, you can't even see how low this thing was in 2015. What do we get to? $6. And really a big part of that run right this year, from 15 to 45. You know, it seems like these things are never going to go down when they don't go down for the better part of almost a full year, going on 2 years on some equities. But protect yourself, folks, okay? And, you know, we're talking about some of these ETFs, Nugget, right? Look at the run from 40 to 180 when you talk about leveraged, okay? JNUG, these are both direction ETFs, folks, from 33 to 202. Now, if you head on over to the front page of TFNN, folks, you'll see those wonderful direction banners. There it is, Nugget and Dust. Okay, Bull, 2x share, Bear, 2x share, daily investment vehicles. Okay, now you click these banners, it'll bring you over to the Direction webpage, their homepage, direction.com. And if you head over to their Education and Insights, okay, at their website, and you can see the Education Center. Okay, they got a university, they have videos in there as well. But if you head on over to the Education and Insights, two of the articles, and I'm going to post these in the Tiger's Den. And we have great interviews monthly with the people over at Direction, okay? And what they always stress is daily investment vehicles. What's so important to understand of these ETFs, okay, is that they're daily investment vehicles because the 3 times or the 2 times that they talk about here, okay, the long-term returns do not always reflect the underlying performance of whatever you're trading. And what these articles do in particular is they put out a great example. It's nothing like example, right? They lay it out. And in periods of vast volatility in both directions, when you get a vast volatility, you get a lot of chop, the numbers can differ greatly, okay? And this example here is, you can take any time period. This one they choose mid-December 2008 to mid-April 2009. And this one is talking about the Direction Daily Technology Bull and Bear 3x shares, okay? In this case, during that period of time, the benchmark, okay, this is the benchmark. Now remember, this is the 3 times and the 3 times. So the benchmark over those, 4 months, 3 months, gained 6.64%, okay? The Bull ETF only gained 9.94%. This is a 3 times ETF. Well, they're daily investment vehicles, okay? And the 3 times would have been what? Almost 20%, okay? But no, you only got 10%. The Bear ETF, now remember, the benchmark went up 6.6%. Well, in your head, you might say, okay, if I'm in the Bear ETF, I'm going to lose 3 times that, right? Wrong. The Bear ETF lost 45%, much more than the 3 times number, okay? And then they go the other way around. Less, maybe more, okay? And this is a period from April 2009 to December 2009. That same benchmark experienced much less volatility. The benchmark was up 35% over that time. The Bull ETF was up 157%, 51% more than the 3 times the benchmark's return. And the Bear only lost 69%, which is much less. So check out these articles, folks, and also Understanding Leverage, and they just walk you through. in terms of your exposure, the assets underlying it, and why they are daily investment vehicles versus on a longer term basis. Check it out, folks, on the front page of TFNN. We'll come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We have the S&Ps up by 61 points right now. Markets in the green. We got a CPI print that's soft. Inflation potentially not as big of a worry to the Fed. You jump over to the dollar, trading at 98.34. But if that's the case, you would expect gold to actually get a pop higher. And on a weekly basis, you are higher up. But we got a little bit of selling. Really what we have is some volatility here, right? Right back to where we were at about 8 a.m. this morning. Gold negative by 18 bucks. Silver, a little selling there as well, down by $1.61 at 65.30. And yeah, I just posted both of those great documents from Direction in the Tiger's Den and the YouTube Tiger's Den. And check them out, folks, because they just do a great job of really educating, right, in terms of how daily investment vehicles react over a longer term basis. And one thing to take away, there's 2 articles I posted, okay? And what's amazing here, though, is that they're daily investment vehicles, okay? Because the longer you're trading something, that on a longer term basis, it might behave in a manner that you don't anticipate because it's not going to meet the goal of its investments on a longer term basis because they're leveraged daily, right? They're re-leveraged daily. Now, what that can mean is that in trending markets, if you're in a bullish leveraged ETF and you are consistently trading higher on a daily basis, it's just basically leveraging and leveraging and leveraging, right? So you're building and you're building and you're building. And so in that way, if you're in a bullish ETF and you're holding it on a longer term basis, your returns, if you're correct, can actually be much larger than you anticipated. But what can happen on the other side of that is if you get chop in between, you're eliminating, because what's happening? You're making money, but every time you're making money, you're leveraging, and then you get the pullback, and it actually takes away more than it normally would have because you're over leveraged versus the prior days. But check out those 2 articles from Direction. Whether you're trading leveraged ETFs or not, always a good education to understand what you're trading and what's out there. Folks, thanks so much for tuning in. Don't forget about Tiger Dollars on the front page of TFNN. It runs through Monday only, and Basil Chapman's coming up next. He's got that great webinar he did this week as well. Check out the opening call. Stay tuned for Basil. Have a great day, everybody.